All right, everyone, here we are with ticker symbol GNUS, Genius Brands International Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back. And we're going to jump into this chart and see what is important for Monday and the upcoming days and weeks. So earnings is actually on November 11th. If we see how this reacted the last two earnings, they did the complete opposite. So this one in May, it rode up, and here in August, it was on its way down. Now, back in August, towards the end of it and the beginning of September, Genius Brands was talking about how they've become debt-free, that they're now having a better balance sheet, they took care of all their long-term debts, I believe is how the story goes, and that they're actually going to now proceed forward. They have the app, for the phone. And then recently they had great news that they partner up with like Samsung, and they're like streaming directly on their TVs, whether it's through smart TV capabilities or whatnot. So Genius Brands is expanding. Then in December or later this fall, they're going to go ahead and create a series of toys for the kids that watch these shows, and they're going to do little cartoon toys and so forth that are going to be selling in the fall or beginning winter. So that's another interesting thing too, which is another source of revenue. And right now, if the company's debt free, one of the biggest things all they have to really focus on is taking care of their investors by creating more revenue flow and creating a better balance sheet and showing that they have profits in the whole process, and then also taking care of their own employees or cartoon characters, the voices and so forth, which we know there's a few different famous people jumping in on this and actually being the voices of some of these cartoons. So as long as they take care of them, they take care of the investors, and they focus now, since they're debt free, on revenue and building their platform. I mean, the innovation and the opportunity is tremendous, but Genius has a lot to go ahead and prove to investors so that they can stick around instead of just jumping in and then leaving. Because if they are really debt free, the only thing I can imagine Genius doing is going up from here, uphill, unless they don't have a good pitch to go ahead and expand themselves out there. They have a problem with marketing or exposure so that more kids are watching their shows or more parents know about them so their kids can watch their shows. And then they just need to focus on either, because their platform is free, doing some advertising on their platform or figuring out different ways where they can create a cash flow of revenue and net income to then show a profit, because that's one of the most important things that drives ticker symbols up, or any single individual stock. What makes them go up is profits. That's exactly what happens, because profits are a paid distribution to all the shareholders. And if we're not seeing profits, not of a lot of investors are going to want to stay. Investors are going to be questioning what is going on. Is this really worth it? And that's why we're seeing this jump, because of good news, speculation. Earnings was coming up, and then all of a sudden, right before earnings, literally 12 days, because it's on November 11th, according to what it's showing here, people are pulling out and they're not staying unless people were securing their profits from this run, and now they're going to start the run again. But we're going to look at this closely, because this is very important for us to know the lowest point reached here and also the highest point reached when the bulls tried to reappear, and where the 50-day moving average lies and where we are at right now. So the 50-day moving average is 115, super important number. As long as we're below it, the bears are in control. The moment we're above it, the bulls are in control. Now, for the bulls to work their way towards the 50-day moving average, they need to break through this resistance, and that's 108. Turn that into a support, break away from it, reach newer highs, and get closer to 115. If this breaks through 115, we're back in bullish territory, and the bulls can start to pull away from it, reaching new resistance levels and newer highs. On the other hand, we have what the bears want. The bears want to break through support, and this is going to tear this down to newer lows. by breaking through support, it's going to pull further away from the 50-day moving average in a downward direction and get it closer to those lows of 95 cents. So if this support is broken through, I want to emphasize to all investors, pay very close attention to how this individual stock is doing. What is the inflow? What is the outflow? And put your 1 minute, your 5 minute, your 15-minute chart frames to see what is going on and what is driving this to go in which direction. If it breaks through the support, pay very close attention to the behavior of the stock, and also pay close attention to how fast is it moving down, or is it hanging out sideways, giving a chance for the bulls to reappear and bring this one back up. I hope that with these cues you guys are well prepared for Monday's trading day. Pay close attention to how this stock reacts beginning of the week and the rest of the week. And 95 cents is super important, because 95 cents is where our lowest point is. If that gets broken through, this will see newer lows. And for long-term purposes, this will be an important number above 115 at 125, so that this can be seen as one of the resistance levels to pull this further away. So pay close attention to this throughout the week, the beginning of the week, and how it continues to unravel. As always, thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I've circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September. And the next one was on the 6th, which just happened yesterday. And it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.